The Nightly Business Report.
Good evening. Tonight, foreign direct investment inflows into Sri Lanka have seen a $96 million increase in comparison to the same period last year, according to the Board of Investment of Sri Lanka. The government reviews a possible reintroduction of minimum wage policy for Sri Lankan migrant workers due to growing concerns over worker protection and wage disparities in Middle Eastern countries. The Colombo bourses end the week with gains on both indices, capping a mostly negative run at the stock exchange. And most Asian stocks firmed after U.S. President Donald Trump postponed a decision on U.S. involvement in the Israel-Iran war by 2 weeks, offering markets some near-term relief.
From Studio 24, here's Anuradhi Vikramasinghe.
A very good evening and thank you for joining us. The Board of Investment of Sri Lanka has successfully increased foreign direct investment by $96 million in the first quarter of 2025 compared with the same period in 2024.
This was disclosed today during a progress review meeting of the Board of Investment of Sri Lanka, chaired by President Anurakumara Dissanayake at the Presidential Secretariat. BOI officials also noted that relative to the first quarter of 2024, domestic investment rose by $21 million, while export income increased by $176 million during the first quarter of 2025. In total, Sri Lanka has attracted $4,669 million in foreign investment thus far in 2025. The meeting also focused on the issues and challenges associated with attracting investment to the country and discussed potential strategies to address them. Addressing the gathering, President Anurakumara Dissanayake stated that the Board of Investment holds a pivotal role in enhancing the national economy and improving the living standards of the rural population. He stressed that opportunities to attract investment in traditional sectors are becoming increasingly limited, and therefore the nation must identify new areas for investment, an endeavour that falls under the BOI's mandate.
With the aim of further expanding the existing trade and investment opportunities between Sri Lanka and Bangladesh, a Sri Lanka-Bangladesh high-level business and investment meeting was jointly organized by the Ceylon Chamber of Commerce and the Dhaka Chamber of Commerce and Industry. A group of investors from 22 high-level companies in Bangladesh representing a number of industrial sectors, including automobiles, agriculture, information technology, construction, packaging, pharmaceuticals, finance, renewable energy and garments, arrived from Bangladesh for this business and investment meeting, while 100 high-level companies from various sectors in Sri Lanka also participated in this business meeting. The investment and business meeting will provide a platform for Sri Lankan and Bangladeshi companies to directly engage in their business activities. Minister of Industry and Entrepreneurship Development Sunil Handunetti, who participated as the chief guest, said that Bangladesh plays a key role in the economic stability of the South Asian region and that Bangladesh has achieved remarkable growth in industrial sectors such as garments, pharmaceuticals and shipping services in the recent past. He said that steps should be taken to further enhance economic cooperation between Sri Lanka and Bangladesh by strengthening business relations between the two countries. The government is reviewing the possible reintroduction of minimum wage policy for Sri Lankan migrant workers, particularly in light of growing concerns over worker protection and wage disparities in Middle Eastern countries.
In a detailed statement to Parliament Foreign Affairs, Foreign Employment and Tourism Minister Vijitha Herath recently addressed critical issues surrounding the welfare and wages of Sri Lankan migrant workers in the Middle East, where over 1.3 million Sri Lankans are currently employed. The move comes as officials seek to ensure fair compensation and improve working conditions for overseas employees amid ongoing geopolitical and economic uncertainties in the region. Responding to questions about wage standards and legal protections under Standing Order 27, Herath disclosed that the ministry is reviewing the possibility of reintroducing a mandatory minimum wage policy for migrant workers under the 2023-2027 National Policy and Action Plan on Migration for Employment. Although no immediate decisions have been made, he confirmed that the policy framework remains under active consideration. He also pointed out that Sri Lanka Bureau of Foreign Employment is developing standard wage guidelines for recruitment agencies to prevent wage undercutting. With over 1 million Sri Lankan workers contributing to the Middle Eastern labour force, the government estimates that effective wage policies could boost annual remittances to at least $1.5 billion.
The government has decided to implement a special fixed deposit scheme for senior citizens aged 60 and above, offering higher interest rates to support their financial security. As proposed in the 2025 budget, the move was approved by the Cabinet of Ministers to ensure a stable and enhanced return on savings to provide greater financial security for senior citizens during a period of economic reform and transition. Speaking at the weekly post-cabinet meeting media briefing, Cabinet spokesman Minister Dr. Nalinda Jayatissa said the scheme will be operational for fixed deposits open from the 1st of July to the 31st of December of this year. Each eligible individual will be allowed to deposit to a maximum of 1 million rupees for a term of 12 months. The scheme guarantees a higher return by offering an additional 3% annually, either above the average weighted fixed deposit rate or the bank's declared fixed deposit rate, whichever is more beneficial to the depositor. Dr. Jayatissa said the government has allocated 30 billion rupees to fund the higher interest rate offered under the scheme. When asked if the government intends to increase the maximum deposit threshold beyond the existing 1 million rupees, he said it will depend on the public response and the number of accounts that will be opened in the next 6 months. Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. The Colombo Stock Exchange ended with gains on the final trading day of the week, with the All-Share Price Index and the S&P SL20 closing in the green. The positive close caps a week filled with mostly losses for the Colombo bourses. For further insights, we speak with Manusha Kandanarachi from First Capital Holdings.
Thank you, Anuradhi. The Colombo stock market rebounded today, recovering from losses seen in the previous session as bargain hunting drove gains across most sectors. As a result, the all-share price index closed the week at 17,081, up by 263 points as well. However, high net worth investor activity was subdued compared to the previous session, while retail participation remained at moderate levels. Investor interest in banking sector counters remained strong, with Sampath Bank, HNB Bank and Commercial Bank leading the gains. Additionally, Singer Sri Lanka and Hales also emerged as the key positive contributors to the index. In terms of market turnover stood at 3.3 billion rupees, representing a drop of around 51% over the monthly average of 5.1 billion rupees as well. The banking sector was the largest contributor to the overall turnover, accounting for 25%, followed by the capital goods and diversified financial sectors, which collectively contributed around 33%. The top three price gainers of the day were Ceylon Printers, East and West Properties, followed by E-Channeling, while the top three price losers of the day were Arpico Insurance, Alpitia Plantation and Renuka Foods.
The week at the Colombo bourses saw a mostly negative trend, with losses recorded on both the ASPI and S&P SL20, despite a positive close today to cap off the week. For further insights on how the market performed over the week, we speak with Shahana Kanagaratham from First Capital Holdings.
Thank you, Anuradhi. The Colombo Stock Exchange began the week on a subdued note, with the market maintaining a broadly negative trajectory through Thursday amid intermittent intraday volatility. Investor sentiment remained cautious, largely reflecting profit-taking behavior. Retail participation remained relatively active, while high net worth investor activity was moderate. During the week, market dynamics were largely shaped by geopolitical developments in the Middle East. Despite a decline from the prior week, daily turnover remained healthy in the ₹3 to 4 billion range, except for one session where turnover surged to nearly ₹7 billion. A notable shift occurred on Friday, with the market rebounding strongly. The ASPI closed the session with the gain of 270 points, bringing the index to 17,088 and pushing the market into positive territory for the week. From a sectoral standpoint, investor interest was predominantly focused on banking, capital goods and diversified financials. Overall, the week reflected tempered investor confidence amid external uncertainties, but the late week recovery highlights buying interest and the potential for momentum-driven gains should macro conditions stabilize. Thank you.
Gold prices fell in Asian trade, reflecting some improvement in risk appetite after comments from the White House suggested that a U.S. strike on Iran over the Israel conflict was not imminent. Spot gold fell 0.5% to $3,353.17 an ounce, while gold futures for August slid 1.1% to $3,369.40 an ounce. The yellow metal remained on the back foot following hawkish comments from the Federal Reserve earlier this week, which buoyed the dollar. Other metal prices retreated, also hurt by some resilience in the dollar after a hawkish Fed earlier this week. Among industrial metals, benchmark copper futures on the London Metal Exchange fell 0.3%, while U.S. copper futures fell 0.9%. Oil prices fell today but remained on course for a third consecutive weekly rise after the White House delayed a decision on U.S. involvement in the Israel-Iran conflict. Brent crude futures fell $1.57 or around 2% to $77.28 a barrel, but they were still set to gain nearly 4% on the week. U.S. West Texas Intermediate crude for July, which did not settle on Thursday as it was a U.S. holiday and expires on Friday, was up 52 cents or 0.7% to $75.66. The more liquid August contract was up around 0.8% or 56 cents to $74.06. Brent prices trimmed gains after the White House said President Donald Trump would decide whether the U.S. will get involved in the Israel-Iran conflict in the next 2 weeks. The Sri Lankan rupee has depreciated slightly against the US dollar today. According to the Central Bank of Sri Lanka, the buying rate of the US dollar has increased while the selling rate has also seen a rise. The Sri Lankan rupee has also depreciated against a basket of foreign currencies, while it has appreciated against certain Gulf currencies. Let's take a closer look at how the Sri Lankan rupee is performing today against other major global currencies. A short break now. This is the Nightly Business Report. Welcome back. In a landmark development for Sri Lanka's automotive industry, Euromotors, a name trusted for over 2 decades in Sri Lanka, has been officially appointed as the sole agent for Jetour, the globally successful SUV brand.
Marking the grand launch of Jetour in Sri Lanka, Euromotors unveiled 2 of Jetour's most sought-after models, the Jetour Dashing and the Jetour X70 Plus. Both SUVs are powered by a 1.5-litre petrol engine and built to offer advanced technology, superior comfort, bold design and unmatched space, decisively positioning Jetour as a compelling new choice for SUV buyers. Armed with a well-established reputation as the authorized representative of internationally respected automotive brands such as Jack, Dongfeng, Ankai and Bonlac, Euromotors brings with it a proven commitment to quality and customer care, consistently raising the bar in after-sales service. Demonstrating this commitment, Euromotors is investing in a state-of-the-art purpose-built showroom and a world-class Jetour service center in Sri Lanka, ensuring Jetour customers receive the very best in sales and service experiences. Jetour vehicles are designed to appeal to modern consumers seeking a blend of intelligent technology, premium styling, and practicality, whether for urban commuting, family travel, or adventure. The models launched ensure a premium SUV experience that offers value for money, coupled with a 4-year or 100,000 kilometers warranty, adding significant peace of mind for every customer. Attractive financial and service packages are also being offered for Jetour customers to ensure a smooth and hassle-free vehicle purchase experience.
Lankam Ceylon PLC is to raise 1.2 billion rupees via a rights issue, which will be followed by a share subdivision. Sri Lanka's Lankam Ceylon plans a 1-for-3 rights issue of 17.15 million ordinary shares at 70 rupees each to raise 1.2 billion. This is according to a stock exchange filing. The cash will be used to settle a related party due and part settlement of bank loans. The firm's current stated capital is 1.28 billion rupees, made up of 55.4 million ordinary shares. The rights issue is subject to Colombo Stock Exchange and shareholder approval. A subdivision of shares will follow if the proposed rights issue is fully subscribed, according to the company, with 68,627,676 ordinary shares split on the basis of every one existing issued ordinary share being subdivided into 2 issued ordinary shares, thereby increasing the number of shares of the company to 137,255,352 shares. Hemas Hospitals, a leading institution in the healthcare sector, recently inaugurated the Hemas Health Plus Outpatient Care Centre in Vattala. This is the latest introduction by the Hemas Hospital network, which is rapidly transforming and leading the country's evolving healthcare sector.
This new initiative has been launched to better manage the growing consumer demand and provide a high quality of service based on the trust that people have in Hemas hospitals. Hemas Health Plus is a healthcare concept being introduced for the first time in Sri Lanka. It's an outpatient treatment unit built with a clear vision to offer medical excellence and a comprehensive healthcare experience under one roof. Hemas Health Plus offers a more relaxed environment compared to a traditional hospital, featuring ample space, a designated play area for children, a comfortable dining area, and an emphasis on privacy during service delivery. This healthcare centre is designed to suit modern lifestyles. Moreover, Hemas Health Plus is further strengthened by its close proximity to the main Hemas hospital, ensuring that patients can be immediately referred for advanced treatment and specialist care when needed, guaranteeing prompt, high-quality medical outcomes.
Sri Lanka Insurance Life has once again been recognized as the most loved life insurance brand in Sri Lanka by LMD's latest brand Finance Most Loved Brands edition. This marks the 8th consecutive year that the SLICLL has earned this honor, reinforcing its deep-rooted trust and emotional connection with the people of Sri Lanka. At the heart of SLICLL's brand lies its unwavering focus on customer centricity, ensuring that every touchpoint delivers value, trust and care, from seamless service and transparent communication to timely claim settlements and meaningful rewards. The company continues to place policyholders at the core of its operations. In 2024 alone, SLICLL disbursed over 1 billion rupees on average maturity and claim settlements, a testament to its commitment to protecting lives when it matters most. The company also declared the largest life insurance bonus in the industry for 2023, totaling 11.2 billion rupees, further rewarding loyal policyholders. Over the last 2 decades, bonus declarations have exceeded 104 billion rupees, strengthening SLICLL's reputation as a partner that delivers on its promises. Let's take a short commercial break. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Most Asian stocks firmed after U.S. President Donald Trump postponed a decision on U.S. involvement in the Israel-Iran war by 2 weeks, offering markets some near-term relief. Japan's Nikkei 225 and Topix indexes lagged most of their Asian peers, losing 0.1% and 0.3% respectively. Export-oriented stocks were the biggest weight as they were pressured by some strength in the yen. Hong Kong's Hang Seng rose 0.8%, while South Korea's Kospi jumped 1.1% to its highest level since early 2022. China's mainland Shanghai Shenzhen CSI 300 and Shanghai Composite indexes rose 0.3% and 0.1% respectively, showing little reaction to the People's Bank leaving its benchmark loan prime rate unchanged. Australia's ASX 200 shed 0.5%, while Singapore's Straits Times Index rose 0.1%. Gift Nifty 50 futures for India's Nifty 50 index rose 0.2%, pointing to a positive open. The world's largest car-carrying ship completed its maiden voyage late last month, docking at Brazil's Itajaí port and delivering thousands of China-made EVs. But not everyone is happy about the situation.
It's the world's biggest car carrier, containing the equivalent of 20 football fields full of vehicles. And it recently docked in Brazil for the first time, disgorging thousands of cars made by Chinese giant BYD. While that could mean budget autos for local buyers, not everyone is so happy about the new arrival. Brazil's own automakers say the flood of cheap cars threatens their viability. BYD has developed a fleet of ships to boost its overseas ambitions, and right now Brazil is its top target. The country's car market is the world's sixth largest by volume, and industry groups say Chinese firms are taking advantage of low import tariffs. They're urging the government to bring forward plans for higher levies to protect domestic makers. Other regions, including the EU and US, have moved much faster to impose steep duties. BYD and other Chinese firms are rushing to expand overseas amid tough competition and slim profits at home. In all, the country's vehicle exports to Brazil are forecast to soar almost 40% this year to around 200,000 units. BYD also has plans to make vehicles in the country, but that too has become controversial. Ministers initially cheered its purchase of a former Ford plant, saying it would help create jobs. But a subsequent investigation into labour abuses on the site has pushed back plans for full production to late next year. What happens next will be closely watched around the world, not least in Europe. There too, BYD is fast ramping up sales and says it plans to begin local production before the year is out.
Alphabet's Google faced a potential setback as an advisor to Europe's highest court sided with the EU antitrust regulators in the company's fight against a record $4.98 billion fine from 2018.
Google faced a possible setback on Thursday while trying to overturn a record $4.98 billion EU fine levied 7 years ago. That's as an advisor to Europe's highest court sided with EU antitrust regulators over the ruling. In 2018, the European Commission found that Google had used its Android mobile operating system to block rivals. A lower tribunal endorsed this, but in 2022 trimmed the final amount to $4.7 billion, which prompted Google's appeal to the top court. The court advisor branded the tech giant's arguments, quote, ineffective, recommending the reduced fine. Judges, who usually follow 4 out of 5 such non-binding opinions, will rule in the coming months. Regulators said Google's illegal practices dated back to 2011, as it required manufacturers on Android devices to pre-install Google Search and Chrome browser alongside its Google Play App Store, adding that the Alphabet subsidiary paid them to pre-install only Google Search and blocked them from using rival Android systems. A Google spokesperson said that worldwide, Android has, quote, created more choice for everyone and supports thousands of businesses. The leading search engine has racked up almost $9.5 billion worth of fines from 3 investigations stretching back over a decade. There are other probes ongoing.
And that wraps up today's Nightly Business Report. We value your opinion as always, so please share your thoughts and feedback with us through email at feedback.ad24english@derana.lk or via WhatsApp at 076-805-7933. We'll see you again on Monday with the latest updates across the business globe. Till then, I'm Anuradhi Vikramasinghe. Thank you very much for watching. Have a great weekend.